Hey guys, you're here with Bo and welcome to another video. So looking at the market, first up, market cap $311 billion, still pushing all-time highs with Bitcoin now breaking $10,000 US. In Aussie dollars, we're talking $13,224. The growth just doesn't seem to be stopping, and we're going to look at some things to kind of explain why that growth is happening, and I'm going to give you my take on where that growth may be going in the future. So first up guys, Mike Novogratz, who was a hedge fund manager, is predicting Bitcoin to reach 40K by the end of 2018. Let's watch a bit of his interview at CNBC, because he says some really interesting stuff.
And the pace of this move has been really fast. And so on one hand, lots of the speculative sensors are out. The amount of retail customers coming in, the amount of phone calls I get, that gets me a little bit nervous that we could have a short-term top. On the other hand, when I step back, I'm like, wait a minute. The whole market cap of all the crypto is $300 billion. That's nothing. The NASDAQ at its height in the 1999 bubble was $6 trillion. And the NASDAQ was a US-led bubble. This is a global phenomenon. 60–70% of all trading volume in these cryptos are happening in Japan and Korea. And so I have a sense that this is going to go a lot further. When I try to think of valuation, Bitcoin really has taken the use case of digital gold. Gold's $8 trillion or $7.5 trillion. And so at 150 billion Bitcoin, 30 times, 40 times, 50 times higher than here, then you're starting to look like Bitcoin's replaced gold, or at least it's on parity of gold. My short-term call, I guess, is things have gone pretty far, and maybe you'll backfill a little bit. But over the medium term, this thing is going to go a lot higher. I said recently I thought total market cap by the end of next year would be $1 trillion. That's probably a little light, but if it's $1 trillion to $2 trillion, that's kind of 6x from where we are now, and it's not all going to go into Bitcoin.
60,000 from where we are?
Sorry, six times.
Oh, six times, okay.
6 times 200.
Okay, oh, okay.
300 billion.
6 times 300 billion gets you a $2 trillion market cap by the end of 2018. And, there's Ethereum, there's Bitcoin Cash, there's EOS, there's all kinds of protocols.
So what are the assumptions? I mean, you made the parallel to the NASDAQ during the bubble days and the total market cap of the NASDAQ back then. What is the assumption on how high Bitcoin could go? Is there an assumption in your head?
So pretty interesting stuff there from Mike Novogratz. So an opinion piece has been done. It says Bitcoin bubble makes .com fever look rational. Let's have a little bit of a look into this. So like Mike Novogratz said, they're basically trying to compare the current value of the cryptocurrency market and Bitcoin to the .com boom. So what they're saying is at the height of the .com bubble, the technology NASDAQ stock index had a price to earnings ratio of 175. So they're using that as a baseline to compare the rise in value of Bitcoin, which has a PE ratio of 708. So it says here that Bitcoins are 4 times more expensive than .com stocks were at the height of their bubble. I know the analogy to the .com bubble gets used a lot, and it's probably because it's just about all we have in terms of an equivalent, highly disruptive technology such as the internet. The thing we need to remember though is cryptocurrencies and Bitcoin are a whole new asset class. They are not a stock, they are not just a currency. They are both a store of value and a currency as well. So it's hard for us to rationalize and use these analogies because there's just nothing out there that we can really compare cryptocurrencies to. The piece goes on to say that bubbles pop due to supply, and that in the .com boom there was an oversupply of low quality companies flooding the market. Because everyone wanted to get in on the junket, on the huge rises in value, on anything internet related, people were buying low quality stocks from low quality companies. The article says here, the same will happen with Bitcoin. The question is when. The combined market value of all digital currencies is just 300 billion. It goes on to say, scarcity is what Bitcoin believers think they have going for them. The supply of Bitcoins is supposed to max out at just 21 million, though in reality, it's likely to effectively grow much larger than that. Now, in the author's defense, what he's trying to say is the forks of Bitcoin are related to Bitcoin supply. So Bitcoin Cash, Bitcoin Gold. So it's basically trying to say that all these forks are adding to the overall supply of Bitcoins, when in reality, that's actually not the case. Every fork of Bitcoin is a different cryptocurrency. It is a different company behind it. It is a different business model. It is not Bitcoin. Bitcoin supply is capped at 21 million. And as we covered in the last video, due to the recent study done that has identified up to 4 million Bitcoins have been lost, the new total supply can be seen at approximately 17 million Bitcoins. We now have Japan's largest cryptocurrency exchange coming to the United States. So it looks like BitFlyer is really trying to target institutional investors such as hedge funds and asset managers. They want to open in the US so there can be cross-border trading between their exchange based in Japan and their exchange in the US. They've said that they basically have a lot of institutional investors already trading on their platform in Japan, and they want to try and entice the same class of investors in the United States. So when we talk about demand of Bitcoin, we can really see it coming from just about every single angle. Bitcoin is often painted as this thing that people are using day to day or want to use day to day as a form of digital currency in replacement for their normal money. But I honestly think that probably 90 to 95% of people currently purchasing Bitcoin are purchasing it for a store of value with the intention to potentially use it as a currency down the track once the scaling issues are fixed. I want to cover some demand forces as well that I believe are going to start coming to Bitcoin in the coming months, if not in the next year or two. So this is starting to gain traction in Australia, and that's investing into Bitcoin or cryptocurrencies with your self-managed super fund. It's very new at the moment, and in fact there aren't a lot of guidelines. I know from personal experience that currently it is not easy to do. So I think in the future, less and less people are going to invest directly into Bitcoin and cryptocurrencies with their self-managed super, and Bitcoin funds are going to be created and actually offered as a formal product. Just some of the existing products that are offered in self-managed super fund packages and other super packages as well are shares and ETFs, managed funds like index funds, there's also foreign currencies and property. So some other products as an example, you've got cash reserve funds, you've got fixed interest index funds, government bond index funds. I believe in the future there will be cryptocurrency funds that will be added here. There'll be funds for Ethereum, there'll be funds for Bitcoin, and there'll be funds for altcoins. I could be wrong, but I think the big investment firms out there are looking at Bitcoin, are looking at cryptocurrencies now as the laws and regulations become more favorable, as confidence grows in cryptocurrencies as a whole, and as people learn the technology and learn how secure it is, that they're not going to miss out. They're going to see these funds as another way to offer a product, to earn amazing returns, and to be able to offer to their clients. And personally, I don't think it's far away. People often ask me, where is Bitcoin going in the future, and what price is it going to be, and at what time is it good to enter? To answer those questions, you need to understand the forces of demand and how strong those forces are starting to become around the world. If you want to understand a bit more about the driving forces behind the demand of Bitcoin and the deflationary nature of its supply, then I suggest you go and have a watch of this video, because I think the contents will be relevant for months, if not years to come. So guys, I thought I would just give you a quick update on my cryptocurrency investment course. It's undergoing the final stages of review, and as soon as that's finished, it will be released and be available probably within the next 12 to 24 hours. Now I've set it up so the first 100 participants will be getting this course for just $15. So as soon as the course is published, I will be putting a post in the comments of this video with a coupon code and a link. And if you use that coupon code and link, that will give you the discount down to 15 bucks. So I'm really proud of this course. It ended up being over 60 lectures with over 4 hours of really good content on cryptocurrencies, how to go about buying them, different investment strategies, risks of the market, self-managed super funds, you name it. I covered just about everything I could possibly think of. I really hope people enjoy the course, and although it has been tailored to Australians, if you're not an Australian, you would certainly still get value out of this course. So guys, I'll keep you posted, and as I said, there will be a link down in the comment section as soon as this is being published. So guys, that's it from me. I hope you have a great day, and I'll see you soon in the giveaway live stream. Cheers.